Today is Thursday, January the 9th. This video is going to be short like they have been all week because you don't need to listen to a video to know to just buy anything at this point. Just throw your dart against the wall and pick a stock and buy it because that's what it's looking like. So let's just make it quick. What is this? Advancers to decliners, almost double, close enough. The volume was exceptionally good, as it has been all week, and the markets are up 0.75% pretty much across the table. So that's going to take the breadth indicator now headed into the upwards or to the overbought direction, but just barely. So we're going to take a bounce off this line, something that we have not ever seen for a year. We have always seen the momentum indicator fall through the line and go into oversold. But that's not the case this time. So everything is just looking great. I would encourage you to read this. I just noticed that I haven't read it myself, but this is the COT leading indicator, the Fed funds COT leading indicator. And usually that's a good thing to read. So I'm going to read it after the video. SPX clearly making a break. Didn't leave a gap because of this wick here yesterday, but we're just getting further away from the cloud, which is always a cause for concern. Apple, amazing, up another 2%. I purchased more call spreads. This time I bought 3 contracts of the 310, the February 310 315s. Why not? Because the other ones are just going to appreciate with time decay. They've now hit their targets. And the only thing left is time decay to accumulate on these, and they'll just make money as days go by. Caterpillar, one of the only disappointing stocks, down 46 cents, basically just staying in that channel. Home Depot, really great move, and I was really hoping that we were going to get this break through this area here. We didn't. We could pop up through this very thin cloud tomorrow and achieve the same result as if we had gone straight up. However, the volume was a little bit low, and you'll look at Apple, and its volume was really 2 days now of what looks like institutional involvement, institutions playing and forcing the volume up. AT&T pulled down, but remember today was an ex-dividend day that's going to pay a 52-cent dividend. So the fact that the stock lost 57 cents was sort of in the cards, because 52 cents of that is going to be paid out in terms of dividend. And my rolling to March saved me. I was able to hold on to my stock, the 60-cent gain, and now we'll get the 52%, 52-cent rather credit for the dividend. Whirlpool up $1.05. It's in the cloud, so that's always an area for some chatter. The Chico span did push its way up more into the cloud, but above the 50, and it ended up at the top end of its candle, leaving a pretty big tail. So that hammer indicates that we should be going higher, and that volume was not so bad. Shopify, I didn't buy anything, but if you bought something, congratulations. Good buy. It's on its way to 435. Amazon, I'm still in that one. We're up 0.58%, a little bit less than the market today. Let's just take a look at the volume. Volume was really low, but look how high the stochastic momentum indicator is here, right here, which if you look back for the whole year, we can only see the stochastic momentum indicator higher than that level once, twice, 3 times, and that area has always been, this area has always been a point where sellers step in. Now this could be a little bit different because we're coming up to earnings, and Amazon should have some pretty darn good earnings. Volume was a little bit anemic, however.
Just a moment.
So what's going to happen? I think we're just going to continue to drift upwards, and any dips are going to be bought.